The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi folks, Basil Chapman, Tiger Technicians Hour, and I'm also the author of the Opening Call daily newsletter. We'll talk more about all these different aspects in a moment, but let me just first say that within the context of looking at the market and listening to what people I meet are saying, people that I know that I don't see very often, who talk about the market per se, there, to a person, I've not met a mega bull. They might personally be 100% invested and on the long side, but I haven't met anyone in weeks and weeks. Actually, I should say months. I'd even say at least in a year and a half to 2 years, I haven't met anyone who's just said to me, "Oh, what a fantastic market! This is unbelievable. I am just doing so well." I don't know if people aren't doing well or whether they don't want to talk about it, they don't want to admit it. Remember, I said it's a taboo subject because it has political connotations. I've never seen this ever before. No, I've seen it many times before, and it was during the last presidency where I kept saying, wow, the market is absolutely fabulous. Why does this administration not talk about how well the market's doing? And they never spoke about it. We've got almost the exact opposite now. We've got a president who talks about the market, claims that it's ease when it's going up, and yet the public. Wow. So now let's go to the market, and we'll see what the wow factor is. In a very brief time, the Dow's gone about 7% down from 27,398 to the low today of 25,440. That's not the issue. These short-term pullbacks, 5%, 7%, it's just not a big deal. It's kind of what you would like to see. You want markets to breathe, just like an athlete needs to breathe, like a musician needs to breathe, like any person needs to take a bit of a breather, a little bit of a rest to regain that energy. Well, it's the weekly chart that is the issue. And I might not have to wait until Friday. Anything can happen now, but we've taken out this uptrend line from the December low of the Dow, 21,712, to the to the June low of 24,701. Let me just get rid of this long position. I'm just going to put an X through it right now. We're no longer long at all any position in the Dow. We are fully committed to the downside. Having shorted from 7 points off the all-time high, and many reasons for it. And one of the things that really took a note, I made a mention of it to subscribers. These two little tiny doji candles the day before, the high of on the 15th of July, and the high of the 16th of July. That little doji is very unusual to have patterns, especially at all-time highs, make this tiny indecisive little notation, like a little plus sign, and then head down. That's usually a tip-off to say, uh-oh, the ball has been thrown up in the air, and it's reached that level where it's not going up and it's not going down. It is about to change its direction from up to down, and there's just a microsecond where it is neither going up or down. That's the doji, and then it starts on the way down. The technicals were very weak, but I used other indicators, and that was telling me, and I said it on air, we went through this whole litany of explanations to say, be careful, because the moving averages that I follow are saying you could go, just like in April when we had the sell signal 2 days before the high, that you could go 6, 7 or more days before there's a breakdown of the technicals and the price, and that's exactly what we saw. It actually went a little longer, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. It actually went 12 days before that very ugly candle of the 31st of July. Okay, that's on the left side. But it's the right side that's the issue. And on the right side is a pattern that I've spoken about over the years. Many people know about it. when I used to do these Master Trader series, I talk about when I do my webinars, when I do my all-day webinars, I talk about it's a pattern that I call the double camel hump. It's like an M-shaped formation. You know, there are some camels that have two humps. I just like to be very visual. I came to the market as a visualist. I was a cartoonist for some period of time. I was I studied graphic arts, etc. And this is very important because this arch formation going negative right now in the MACD weekly chart and the stochastic right at 80%, so close to going under 80%, which for me is a benchmark of strength, goes under it, starts to say, hey, be careful, says we could have this pattern that makes the weekly chart a lot more vulnerable. So the next few days, it's really important that somehow or other the Dow gets to the 26,190, 26,250 level to show that it's trying to form some kind of a base instead of arching over, getting ready for a sudden slump to the 24,700 level from June. We don't want to see that. I don't want to see that because that monthly chart so far is still pretty good. Okay, so that's my explanation. Any all-time high in the next 2 months would be absolutely fantastic. I think it's going to be tough to do it, at least for August. August, I said before, I thought August would be a monthly down candle. So far, I think that's what we're getting. Okay, let's do the same thing with the S&P. I'm not going to do that. I did a lot of it yesterday. Let's just do this real quickly, and I'll give you parameters to look for. Oh, let me just show you something else here. Look, in my automated Chapman wave notations, I picked this up. It's on TLT. The TLT hasn't got a single upside resistance level in this automation, except the 10 minutes has 142.98, and I don't see anything anywhere else. And remember, on the downside, when I was looking at the reason why I wanted to short the Dow, and I was looking at the other indices as being very weak, I had a plethora. We'll look at them right now. Look at the Dow, just a plethora of upside resistance, automated Chapman wave resistance levels, all the way to 27,474. You break that, you go to 28,053, 28,591. That's the next step later in the year, not yet. And look at the monthly charts, a lot in the 26,600s, all the way to 28,950. We're not even there. But support, look at this, 120-minute chart, 15,275. We haven't got there yet. 275, what was the low today? The low today is 25,440. So we're quite a bit above that. All right, that's that. Now look at the S&P. The S&P, automated Chapman wave notation, resistance levels, all those green ones just above, right there, 3,010 all the way to 3,020 and 3,058, very high, 3,027. And that's what, in fact, was the high. The high was 3,025.61, just missed it by a few points. And look at the weekly chart. Look at the resistance levels. Look at the monthly. And now all of a sudden, you've got the support levels just washed out. Let's see what the 10 minutes says. Nothing here. And in 28.46, we're just above it. We've already been below it in the 120-minute chart. That's the reason why this is going to be a very choppy period, and we have to just scream through all the resistance levels, or the shorter-term resistance levels on the upside to say, phew, we've established a base, and now we can have some kind of a trading, slightly moving higher with higher lows over a period of a week and a half, because so far this is not great action. I'll be right back. Basil Chapman, Dow's down 334. S&P's down 29.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Hi, folks. We're back. A couple of things I wanted to go through. And forgive me, some of the charts would have been notated just beautifully yesterday. Some of the notation is not here. I had to do just a rescan because I had a problem with my monthly chart. For some reason, my monthly chart wasn't showing up, and I tried a few different things, and then I had to go to TradeStation. I had to go all the way to, where was it? Right, yeah, I had to go to import, export, backup, restore, and all sorts of things like that. So it went back a few days. So all the notation I've done the last couple of days disappeared. That's one of the problems with not automating. But let me tell you, if I was automated, I would have missed a bunch of these things because they use much more advanced Chapman wave techniques than what you get in just an automated notation. So that to me was very important. So the USD JPY is slumping right now at 105.58 after that peak D high five sessions ago. And that weekly chart is in leg D to the downside, big arch formation. That Chapman wave Roman candle took forever to retest the low. It's about to do that. It's on the 200-period moving average. Not good. Look at the dollar. The dollar has had a fabulous, fabulous move. Now it's holding pretty nicely, but I believe it's in for some kind of a consolidation, and we'll see whether the administration is able to do something that essentially brings the dollar down as a weaponizing tool to go up against the let me just get this right. Up against the Chinese yuan and being slightly devalued, and we'll see what happens there. But look at the EUR-USD. Very nice move today. It's up. There was a doji candle yesterday. I said it really needs to push quite a bit higher. It hasn't gone much higher, but this is the start of saying, be careful because the dollar could have a longer time out. It's done everything I wanted. I wanted a monthly leg D. It's gone to the D. I wouldn't be surprised if this month of August it goes to a peak D and it bumped into monthly resistance levels. Dollar can easily have a bit of a breather. I think later in the year it picks up again. So that's the way I'm looking at it. Euro could have a bounce from the 1.12 level right now, up 0.003. Could go a little higher. Could go even to the 1.15 level or 1.14 to 1.11. 1.14 to 1.15 over a period of a couple of weeks. Let's see what happens there. And if you're looking at, where did I want to go? Yeah, if you're looking at gold, I lost some of that notation. It's a pity. So I'll do this again. We broke out of that rectangle. I spoke about it the other day. It was very silly. My theory should have said, hey, mister, if you go 1467.4, one tick above the high of the 19th of July, you've broken out. Not you. Gold is broken out on a continuous contract. Not only that, the stochastic has crossed positive. It just seemed to me that, wow, I didn't see the reasoning for that, but something's going on internationally that is saying gold is now absolutely a currency. It's a currency of fear, and the dollar is a currency of respect for the United States economy. Therefore, I'm watching it closely to say, hey, together with Cintas, which is U.S. really, this is if ever you want to look at the economy, Cintas is it, because I have to update this as well. It did make that peak D right there. And now it's only pulled back a little bit. I can put the down arrow in on the daily, but that weekly chart still very strong. Overalls, uniforms, rentals, HRB, I haven't looked at that. I wonder if I've still got the notation there. I do it so many times a year. Yep, I lost it. There it is. H&R Block. No, it wasn't that. It was HRB. What is that? Robert Half, RHI. RHI, I hope you please. Yep, you got it. So there was that goes to a peak D spike at 64, almost a round number high right there. I'll tell you the exact date. See, I'm trying to put this as a picture. I don't want you just to get individual sectors and things. I want to put it together as a picture. Look, these are important. Robert Half, these are jobs. This is very important. It makes a high of 63.97. On the 24th, it's trading down to 55 right now, but it's that weekly chart that failed to rally. It's at the 200-period moving average. Is there a picture here that says we're about to have some kind of at least a mini recession or a secular recession, something in maybe the sectors like the? Someone tell me, there is a FANG ETF, isn't there? I wonder if it's no, it can't be called FANG because there's a stock called FANG. Yeah, but look, here's Amazon down again, but stuck in this lower range. This is important. Now, once I've gone through those areas, let me also talk about the IYT. The IYT is the transports, big move down from 195 down to, it hasn't taken out the low of 3 days ago. Nothing so far has taken that low out. Very few, the Dow did. Trading at 180.47, the low is 179.41. 172 is really my target for the transports. On the weekly chart, should take another little bit of time before we get there, and that's going to be very important. If we don't get there, if there's a rally somehow in the next couple of days, it takes it to 186. That'll be very, very impressive. Now, I think the transports, together with crude oil, is telling us a story here, and crude oil right now is down 275, down at 50.89. It's undercut all the support levels. It's taking out the rectangle formation that I drew a long time ago. It's gone to a leg C to the downside. Another reason to say, gee, wait, are we having some kind of a very silent recession out here? Look at the XRT. Let's go to the RTH, which is the REITs. This is the Van Eck Vectors Retail. Haven't finished this. This went to a peak F in the weekend. That is absolutely so far. Looks like a peak F, a new all-time high last month in the monthly chart, and a leg E, peak E from the 115 area, 114.15 area, comes all the way down to the 200-period moving average in the daily at 105. Not good. Look at the SMHs. SMH is going to be a good clue. What are they down? They're down just 62 cents, holding okay at 109.42. Takes out the low of 107 and 106.16, the 200-period moving average becomes a target. It's that monthly chart, the weekly chart that says to me, be careful. You've got a peak D. The MACD is not very good, hasn't crossed negative, but it's really not holding very well. Stochastic's under 80% at 74%. You can see why I've said to subscribers, we've got very few shorts. We did put in a short, 2 shorts today. One is holding above the entry point. Actually, both are. So a very, very selective, but it's the market short that we really are looking at as a proxy for what I really am thinking right now. Choppy period. And now we could start to see slightly lower lows and slightly lower highs. as the sideways movement kind of testing the base level of the 25,000 in the Dow is going to be tested. So a couple of things I want you to also look at here is the TLT. The TLT spiraled. I mean, look at this monthly chart. 143.62 was the high of July of 2016. Haven't we just finished July of 2019, 3 years later, and we are within a point, less than a point of making that left side high? And that to me is very important because the MACD is still very strong and stochastics at 95%. In the monthly chart, I have to emphasize, this is like looking at the tide. You can get your little waves that you kind of surf and all that stuff, but it's the tide that makes the difference. And the tide here is saying it is going up, and that makes bonds, the competition in lower yields internationally, a really big issue. I'll talk about that when we get back. Basil Chapman, Tiger Technicians Hour. Dow is down something like 362. I'll be right back.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks. So the 2-minute E-mini chart, look what we've got. We've got the trough that was made at 10 to 9 this morning, 10 to 10, sorry, at 28.23 in the E-mini. That was, in fact, the low that started peak A, peak B, peak C, peak D, E, pulls back, the MACD holds, 9 and 14 period moving averages, and it pops up over the 200 period exponential moving average to a leg F, peak F, double top, triple top, retest in the cup formation, and then kaplop, it comes down. It's in a channel, and if it starts to break into the 28.55 area, it says maybe it'll retest the 28.58 200 period moving average again. It just better hold 28.40 because that's going to be a real problem if it breaks it. And a couple of questions I had. Let me just see. I just want to see if there are any calls. Nobody calling. That's okay. There, the nice little pop. You got that right there because the MACD was turning up. Stochastic turned up, and the on-balance volume made a slightly higher low. So these are patterns I want to talk about. Why? Because in the Chapman wave methodology, we're only looking for three kinds of patterns. Straight up, straight down. You can see here on the left, there's a straight up, straight down. It went from the low here to the resistance at 28.54 in the 2-minute chart. And so that's one. The arch formation, that's two. And the cup formation, that's three. When you put them together in the red, it means the left side low is probably going to be taken out, and you get what I call the dreaded H pattern. And the Y formation, the inverted H or the inverted Y really, says that if on the left side you take out that left side high, you can go even higher. Look how this spiraled through that resistance. That's a very nice move. Now the Dow's only down 290. There's just a lot of people saying, I think they're... The reason why I chose two longs today, even on a day like this, is because I'm seeing not bargains, but I'm seeing risk-reward relationships that say, you know, if you can get it here and it survives the next couple of days, and then there's a big rally into maybe options expiration next week or something like that, you could have a nice percentage move. That's the reason why. But overall, got to be really, really careful. So, okay, that's enough with those patterns. I wanted to also just show you something here. This is the FANG. Thank you, Morgan, in the den. This is trading at 11.99, down 7 cents. You remember the pattern that I was talking about right here, the H pattern? Well, there's another pattern that's a derivative of this. If the lowercase h holds the left side support and rallies again, unless it spirals sharply above the left side arch high, making a cup formation, there's a chance you're making another H pattern. Maybe longer, maybe shorter, maybe a little bit bigger, but another H coming back to retest. Very important test of the low, and this time it took it right out. So at 11.99, wow, this is exactly the area in the 11.90s where it better find some support, or else it's going to continue going to new all-time lows because it's really an IPO. It's called the AD Shares New Tech and Media ETF. I would have liked something that's just purely FAANG as an ETF, but I don't know if there is one. But that was the question that I had asked in the den, and that was the answer. So I just wanted to show you something else. GWPH must have come out with some kind of a good report. It is in the GW Pharmaceuticals, PLC, medical marijuana, trading at 160.95, up 846. Well, it made a low of 147.91 3 days ago. Today's high is 168.45. I would say that 147 to 168, 20 points, was 13%, 12, 13%, is really good. But unfortunately, it's giving back a chunk. And you remember the rectangle that I drew here? And I said, this is one of those. When I kept getting asked about the ETFs, I said, this seems to be one. It's medical marijuana or medical cannabis, those products. And this seems to be one that has, look, it has time on its side. It's been around since 2013. It's made a peak D, pulls back, makes a peak E, pulls back. This could be a G. I'm calling it a B for now, but so far it has the characteristic of a B. But in the longer term, this is the kind of company that'll probably survive because it's got history behind it. So that's really important. And I would just say be real careful in this cannabis area because it's been very, very tough. We haven't been in for weeks and weeks. We were in, took a little profit, took a little losses, and then I said, no, it's just not worth it. It's not yet this period, this sector's moment. It'll have a moment, and it's going to have a big moment, but I don't think it's just yes. So a question I had was, where did it go? Yeah, the XLF, this is very important. This is the S&P Select Financials ETF, makes a peak F. Wow, I have to renotate some of these again just to put in what it was at the prices. Doesn't matter. It doesn't take more than a few seconds. But it's gone from the 28s down to the 26s, but 26 is right here. This is a peak D in the weekly chart so far. that makes me a little cautious. It says, even the financials with their really good books, I mean, they've come up with some pretty good earnings, steady earnings, I should say. Not great, but steady. And they're still having a struggle. So you got to be careful. The KRE, what was the question? KRE, just KRE, what's it doing? Yeah, I haven't updated this. I actually had updated the other day, but it's gone from the 55s down to the 49s. Look at this 200-period moving average. When you go up and down, below and above the 200-period moving average, especially in the weekly chart, you can keep doing that for a little longer. So just watch 48 support over the next 2 weeks. It has to hold, and try for the 57s. If it can get to 57 from 49 in the next 3-4 weeks, that'll be a really good sign. Wow, it's a lot of effort there. The dreaded H in the monthly chart, I'm watching that closely for that. Question I had about, so some of the foreign banks, you got to be careful. Let me just see what a UBS, it's not a foreign bank, but it acts like a foreign bank. Down 10, it's at 10.70, down 29 cents. Peak F Doji high on the recent recovery high. Oh, this UBS doesn't look good. It made a high just last year. It was up in the 20s, and now it's at the 10s, got cut in half. Wow, just not good. Be careful of these guys. This is just, you remember EEM I was talking about? I said, EM, you've got to be a little careful here. It's holding okay. EM is the iShares Emerging Market ETF. There's an H pattern in the monthly chart, made a gap down to a low in the weekly. I'll give you levels. It has to hold 38. Or else it's got a problem on a closing basis. Has to try by about, what is it? This is the 8th. By the 21st, it should be touching 41 or 41.50 above the daily 14-period moving average, this black line right here. It's got to be holding above it. I'm giving it a full week and a half to do that. I'm giving you a full week and a half. All right. So that's that. And I wrote down a couple of things that I wanted to look at. Yeah, I was asked about McDonald's. Let's see what McDonald's is doing today. It's probably up. Huh. Oh, I didn't finish this. I have to do this again. Remember, I got to a D right here in the alternate count. This is A, B, I think that was C. I don't want to do it right now, other than to say the weekly chart made a D. It's one of the few stocks in the Dow that's up right now. It is up 1.79 at 215.87. And what I said is that that weekly chart is really strong, monthly chart is really strong. And just for now, I'm thinking that there's a trading band between the 208s was the level I spoke about and the 220s over the next 2 months. That's kind of the level. Break one of those levels within that time frame, and that's probably the direction you'll be going in. So below 208, I think it's let's call it 207, but closing below 207 on a weekly basis, McDonald's starts to go lower. In the meantime, chop, and I wouldn't be surprised if it tries for 220 at some point sooner rather than later. I'll be right back. Dow's down 284.
If you're in the CD market and looking for a secure investment, the Tiger First Mortgage Program may work for you. The security for these first mortgages are building lots in the tax opportunity zone in St. Petersburg, Florida. The Tax Act of 2018 set up tax-free zones across the country where you can build and hold for 10 years and pay no tax on the profits, which makes these lots valuable. The investment is anywhere from $30,000 to $75,000. The interest paid is 7% yearly, paid on a monthly basis. According to Bankrate.com, the best rate for a 4-year CD in the country as of February 20th is 3.1%. A $50,000 investment at a normal 4-year CD rate of 3.1% would give you income of $1,550 per year or $6,200 over the 4-year period. That same $50,000 investment in the Tiger First Mortgage Program would give you $3,500 per year or $14,000 over the 4 years. Which would you prefer, $6,200 or $14,000 of interest on your investment? If you would like more information about the Tiger First Mortgage Program, you can call me at 877-518-9190. That's 877-518-9190.
It's amazing to think that Tom O'Brien started his weekly gold report 17 years ago, with the first issue published April 7th, 2002, when gold was trading at under $300 per ounce. Gold peaked at more than $1,900 in 2011, and after spending many years consolidating at lower prices, gold may be poised for its next big run. Tom O'Brien publishes his weekly gold report every Monday morning for subscribers, consisting of coverage of the XAU, HUI, GDX, the dollar, bonds, South African rand, as well as 25 different mining equities with specific buy-sell recommendations. As of April 1st of this year, the Gold Report currently has 8 active positions with an average unrealized profit of almost 8% for each open trade. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your Gold Report subscription today, visit the front page of TFNN.com. Don't let gold's next big run pass you by. Sign up today. Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foresight Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Just for those subscribers who might be a little more interested in actual the work that I do, I'm not always able to explain it in great detail because there's just so much you can do in a daily report, right? My Chapman Wave 5, that X started a brand new move right there at 130 and the 120-minute chart of the Dow at 27,175, and it came down 1, 2, 3. You would have noticed yesterday that I had 4 over here. It turns out that it continued as a 4, and today we've got a 5. And that says to me, you've got to be prepared. We've already had this. The market has knocked out bulls, it's knocked out bears, it's knocked out bulls, it's knocked out bears probably every single 3 hours of the day for the last week at least. So at this particular point, I wouldn't be surprised if there's such an oversold condition. We'll look at the VIX in a moment, that this is really a 5 and that we could go to at least another arch formation. It doesn't have to be a start of a brand new 1, 2, 3, 4, 5 to the upside or even a peak A, peak B, peak C, D. But this does say right here, and this is the 120-minute chart. And if you look at the 120-minute chart on the right here, 25,275 is the automated Chapman Wave support level. So we went above it. We went to 25,000. What was that? 440s or something. So this is. Hey, was that today? Yeah, this is a huge move. 25,440. We're up 300, over 300 points from that low. Yeah, I think we're getting ready. That's the reason why I want you to start some positions today. I had a question from one of the subscribers saying, I don't know if I can get it right now. I'll try to get it. What did he say? He put it very succinctly. He said, yesterday at this time, it looked like I was a genius for going along. And then this morning, it looks like the dumbest thing, brilliant and dumb. But that's exactly this market. That's what it's trying to do to you. It's trying to frustrate the heck out of you. That's why I said we've got to be looking at positions, and we want to take those positions. We want to hold them because there's a chance that if we can survive the next few weeks with these particular positions, it's going to be good. So, and at the same time, I don't want to get carried away because it's a really volatile market. So I just wanted to show you this Chapman Wave notation. Have a look at this. The VIX index, with all this, hasn't hit over a very high level for weeks. And not only that, it hasn't gone to an overlow level for weeks. I mentioned the other day that the VIX is on vacation. I said, I think it's in the Hamptons. Someone thought I was talking about me. No. The VIX has been on holiday. It hasn't noticed what's going on. This is so unusual. So I said to subscribers yesterday, that has implications for the short term, negative implications for the short term, but it could turn out to have positive implications for the more, I wouldn't even call it intermediate term, but I'm talking about for the more than short term. In other words, for 2 weeks, 3 weeks. Okay, now let's just quickly look at the Dow. Look, yeah, it's at the upper range. It's right on the, it's trying to test the 200-period moving average. So I would not get overly, I think a chunk of the downside move in many of these stocks has been done. I'm suspecting you could get a rally and there may be some more bad news. And then you get that internal low with a residual low. In other words, earthquake and aftershock, sometimes aftershocks worse than the earthquake, sometimes the aftershock lasts a lot longer, sometimes it isn't even close to the earthquake, we don't know. Yeah, look at the VIX. The VIX this morning, and this is going to be very interesting. The VIX right now, 21.09, did not take out, even though we made a lower low in the Dow, we didn't do that in the S&P, we didn't do that in the Qs, and you can see we didn't make a new recovery high. Oh, I got to do these notations again. It's okay. At least I've got my charts back. I don't mind. It doesn't take me very long, except there was a lot of work I did in some stocks that I really liked. All right, doesn't matter. So the high that we made 3 days ago of 24.81 in the volatility index, today's high is 23.67. So far that's saying the buying isn't, the selling isn't as intense as it was. But look at this weekly chart. We've gone to a leg B. I wrote this in. I'll do it again. This is now a peak B with a high of 28.99. I think that's what I said. No, what that? 28.9. With a high of 24.81. Got the numbers a little mixed up there. Let's just put that in for now, 24.81. Because if this market can close down 80 points at the end on the Dow, you'll see a lot of buyers coming tomorrow. They're going to say, oh, my God, was that it? Was that it? And I got a feeling this market's going to continue this whippiness. But some stocks that have been underperforming are the ones that might start to find some kind of support here. So watch this closely. VIX index, weekly chart. How does it close Friday? Does it close down in the 16s or above 22 is going to be the big question. A long way to go between now and Friday. Okay. And then statement. Margin debt will now show its ugly head. No, it wasn't the question. This is the one that I was looking at. Amazon. Jeff Bezos has sold $3 billion worth of Amazon in the last week. So that must be, maybe he had to pay or maybe he paid cash for his Tesla. I don't know what it is. $3 billion to this guy at this particular point is, well, maybe now that it's half because he had to pay half, right? So I don't know. Someone out there knows what Amazon's worth, but the $3 billion is really a very small part. But yeah, it's a big number. And if you look at Amazon itself is trading off its high. It's underneath key support. Look, if you just take this very simple trend line, and there it is. Look, it's gapped down, but the week is young. Anything can happen. Amazon has to close to get back above the trend line, what was support, now resistance. It has to close above 1810 by Friday to be above that. I'll make it simple. That's the way we're looking at it. Yeah, that's a good question. Does he have a personal budget? Yeah, he probably does. Yeah, let's see. I have to tell you, Jeff Bezos, in history, when you go back and you look at all those people, the Morgans, the Rockefellers, the DuPonts, the famous names from the 1800s into the early 1900s, Bezos is right up there for the 21st century, and there's no question about it. He's done some brilliant things, and we'll find out whether or not in the long run it's going to be to our detriment, to the benefit of people. We don't know right now. I would say it's kind of to the detriment of people, not so much to many, many retail stores. I read a number the other day, how many are closing a week. It's quite extraordinary. Okay, enough with that. Let's get back before we go to our break. And we've got our final section coming up. I want you to do this. Remember I said I'm looking at Ford. Ford is holding very nicely here. It's just down 3 cents. I'm looking at General Motors holding, it came back from the low of the day. It's up 4 cents at 39.12. Don't rule out everything. There are some areas, and we will know by this Friday, that are telling us that they have survivorship skills in their chart formations, and there are some stocks that I think have been absolutely fabulous, and they're going to get obliterated and you don't want to stand in the way of those. And I suspect it's many of them are China related. But let's see what the FXI is doing right now. The FXI is China. Yeah, look, China is holding above the 3 days ago's low. This is one little good sign that we're looking at. FXI, this is the biggies. The iShares China Large Cap ETF trading down just 13 cents at 38.53. Not bad, but the weekly chart doesn't look good at all. I'll be back for the last segment. Basil Chapman, Tiger Ignition's Hour. Dow's down 260.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools, as well as provide great market calls too. Sign up today.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They've been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
Hi, folks. This is Steve Rhodes. Stay tuned for another great hour of the Trader's Edge, heard here at TFNN.com.
Hi, folks. So we're looking at a peak F in the XLF. So the question just came in, fading rates. Will XLF decline? Maybe sent too late for today's show. Jim, no, not too late. You just got in time. Yeah, I think it's slightly different. I think that there's an issue that the banks have done a lot of things successfully. They are being impacted by rates, there's no question. You can see the chart. They're being impacted by the low rates. But I think there's something else that's going on, and each one's a little different. And I think the ones that have more connection to the brokerage industry are the ones that are going to do best later on. So to make it simple, yes, the XLF is taken out as uptrend line intra-week is how it closes. But even taking it out says to me, there's a real good chance I have no choice but to put a down arrow coming up Friday on this leg D, going to a peak D in the XLF weekly chart. That will impact the monthly chart. So your point is exactly right. And you talk about the SKF, and the SKF is the, there we go, real quickly. I wrote it in the wrong place. Here we go. SKF is the inversion. It is the SKF. It's what you can buy and go long, except it's a short. It's called ultra short. A Financial Pro shares. It's trading at 17.82, up 48 cents, up 2.77. Yes, this is a leg set. I think it will go to a D, and it's getting close to that D, but 18.67 is a 200-period exponential moving average. So I'm going to be watching this closely, but you're right, and that would coincide with what I'm looking at, with a good chance that the XLF has a chance at least to keep testing the 26s. If it closes under the 26 level, I have to consider that the financials are being very negatively impacted by the yields rather than having some independency. So, yeah, I think you're absolutely right, and I do think the XLF should go a little lower, and if you are in the SKF, it should go a little higher. Good eye. So, yeah, just before we wrap up, let me say my service is the opening call daily newsletter, very comprehensive. We've taken profits in almost all our long positions. We're kind of out. We're trying to start new positions at different levels. And I'm looking at this and saying, a lot of these, in the sectors that I particularly like, looking forward to 2019, the next quarter, there are certain areas we want to be in, and we're starting to tiptoe in, and that's the way I think we want to do it. Just very carefully. We've raised a lot of cash, still have a short from the Dow, starting at Dow just off the high.